What are you thinking ahead of the payrolls number? Because 150,000 is the estimate, but the range is huge, between 70,000 and 220,000. It seems there's a lot of potential for a lot of people to get a surprise.
Yeah, I think, though, we may be a little bit overly geared up for this non-farm payrolls number. Everyone knows that the focus has shifted from inflation to jobs, and therefore we've been talking a lot about this is the big print that's going to move the needle. But I think it would really have to be, very shocking data in either direction to change things. I think if we come in line, it doesn't change much. If we come in slightly softer, well, we're already pricing in rates market that the Fed is going to go in a very aggressive easing so rates market's already pricing a recession. So not too much of a big move there. If we get a slightly strong number, well, then I think, yeah, short term, it causes a little bit of disruption. Rates go a little bit higher, cause a little bit of upset in markets. But I think that this market is so keen to push the Fed to those rate cuts that we soon move beyond it. I actually think that earnings in the next earnings season that starts the end of the next week might be the more consequential kind of factor over the next month.
What about oil prices? Do they still have the potential to move these markets more broadly outside of the commodity complex? Yeah,
again, I think people are a bit surprised that there was such a slow, delayed reaction to Middle East geopolitics in oil prices. We belatedly got it. And that why we're not seeing kind of risk off as oil prices go higher. I think there are a couple of dynamics there that are kind of clouding this. First of all, from the 70s, we got so scarred by the fact that whenever oil prices went up, everything collapsed. And it's the reaction function of the rest of the world slowly eroded over time. It's become clear in the last 15 years that Middle East does not dominate world energy prices in the way it once does. Not only is the US now the world's largest crude producer, but we have so many other alternative forms of energy. So Middle East is still very important for the energy prices, but they're not completely dominant. They're a more marginal player. It's a bit of a disruption, just an extra factor on the sideline. On the other side of that, we're very, very confused by whether it's demand and supply driving this. Is this sudden spike purely about geopolitics? Because, we got nothing for a while and then suddenly we got a big extra escalation. Or is it people suddenly buying into China stimulus? So I think there's a little bit of confusion of whether our oil prices are being driven higher purely by supply issues, or is there a bit of a demand factor as well?
How much of that is going to be a massive dislocation in terms of that broader read-through, though, Mark? I mean, it feels like complacency in this market in the last 30 seconds here. Talk about the margin of the move that we could see if we do see more headlines off oil.
I don't know how far we'll extend, but I don't expect it to sustain. Again, even if you take the most extreme example where Straits of Hormuz is blocked and that causes massive consequences, there's still much more energy sources than there were 30, 40 years ago. So it'll be problematic. We'll get elevated prices, but we're not going way above 100 for a sustained period of time.